So again, hello everyone, and thanks so much for taking time to call in. I guess first I have to give full disclosure. This is not the presentation I had originally prepared yesterday morning. As events yesterday partially overwhelmed one of my overarching themes, but I'm persistent and I think many of my points are still valid. Now they just need to be qualified a bit more. And that's slightly lengthened the remarks, so I apologize in advance for that. And secondly, thanks also to those who sent me in thoughts and questions. I really appreciate them, and although perhaps the presentation won't give them all the detailed response they warrant, hopefully everything will tie together in the end, hopefully. And that's actually the first major theme for what I wanted to talk about tonight was hope. And it's kind of hope that after 2 years that were chaotic, stomach churning, and just honestly exhausting, that we may be entering a period of relative stability in the economic and financial world. Now I've got my colleagues Stacy and Steve here and many of you there. Please don't call the mental health hotline yet. I realize this is kind of an exceptionally risky stance to take to sort of argue that stability could be coming. And certainly the past 2 years have been very disappointing to believers in stability. But again, before you reach for the 911 call, just allow me to make my case first. And then I will temper that hope with some admittedly disconcerting realities that continue to bedevil us. So my case for a return to some level of stability, it relies on 5 fairly recent developments. And I'll go over them all in detail, of course, but just the elections, the stock market, oil prices, trade, and the Federal Reserve. So first, the elections and the return to divided government. So for better or worse, the chances of significant game-changing legislation, such as tax cuts or tax increases, or changes to social programs are virtually zero. And again, I realize this could be interpreted positively or negatively, but it's hard to argue that divided government is not a stabilizer. Secondly, the stock market, which has experienced, as I think we all know, a ton of volatility over the past 2 months, with the technology sector particularly turbulent. And although it's always painful when the market drops sharply and suddenly, in the long run, it's healthy when investors as a whole are reminded that stocks do indeed go up and down, and that valuations of stocks actually matter. So as we sit here today, stocks are still, I would say, still expensive, but levels in the stock market do appear more sane than a few months ago. And just that simple fact makes a case for relative stability going forward. Okay, my third argument for stability is just regarding the price of oil, which has fallen dramatically in recent months. It drove, just a personal aside, just driving around today in Maryland, and I saw the price of gas was $2.20 a gallon. I was like, wow, what happened to those 50 cents? So it's really happened. And rather than being a potential source of stress for the consumer, energy prices are likely to provide a boost. And so how did this happen? Because as recently as summer, just a few months ago, really, prices seemed destined to soar as the prospect of a complete cutoff of Iranian oil was promised by the Trump administration. Instead, American oil production soared, the global economy wobbled a bit, and when push came to shove, Trump decided to allow Iranian exports to continue. Now, it's true this was portrayed as a temporary waiver, but it seems obvious, at least to me, that someone's decided to weigh a high-stakes squeeze on Iran versus the benefits of low gas prices and decided that American drivers took precedence. Another development that seems to offer hope for relative stability comes from the Federal Reserve, which just as recently as last week signaled that they're near the end of the interest rate increases. And given the effects of monetary tightening, a subdued housing market, weakened auto sales, greater uncertainty in the stock market, the cessation of interest rate increases would be welcomed by investors. And although the timing of the announcement was uncomfortably close to the latest tirade from the White House, the truth is that the interest rate increases have been effective at tamping down overexuberance without severely impacting the overall economy. And if the objective of monetary policy is price stability or low inflation, however you want to read that, then the Fed would be warranted in declaring mission accomplished and refraining from many more interest rate increases, although there is certainly another one that will occur later this month. And a final source of stability, and this one's where the ice gets a little thin, is the calming of tensions regarding trade. And this is kind of a look back from where we were 2 years ago to where we are now. So over the past 2 years, we've confronted so many nations, friend or foe, over trading policies and tariffs. Tariffs here, tariffs there, waivers everywhere, and threats omnipresent. And yet here we are in December of 2018, and looked at from a worldwide basis, tempers have cooled. We have a 28 version of NAFTA that ended up looking like the prior version with some modernizing and peripheral changes. Frictions with most Asian and European countries have, although still getting the occasional angry tweet or soundbite, they've mostly abated. The one exception until last week was the most significant, and is in fact the #1 threat to the global economy, and that's a trade war with China. We seem to have a truce with that trade war, and although that recent cessation in hostilities for trade is merely temporary, 3 months, it seems more likely to me that this will in fact resolve itself in some sort of agreement that might go past 3 months. That will probably end up being more style than substance. But whatever ends up happening, I do think the case is evident for at least this 3-month respite from chaotic and reckless approaches from both sides. So those are the 5 developments that do point to a more stable world for investors to contemplate. Now, for us, kind of an intriguing question is, well, how will investors react to this? And should it come about, of course. I've often marveled over the past 2 years how the stock market was a virtual oasis of stability when compared with the news headlines. So it's kind of intriguing to contemplate how investors will behave when there's less unpredictability. And I guess this is where the second theme of what I've got on my mind is where the disconcerting realities emerge. Because what I've really found disconcerting in recent weeks has been the volatility, and that, of course, means up and down, that the stock market has experienced. And suddenly, and again, this is kind of my major takeaway from this evening, suddenly, and unlike the recent couple of years, investors appear to be getting caught off guard by the policy changes or developments or even, excuse this, the tweets. Seem to be catching people off guard much more than has been the case. So we have to admit that we could be entering a much more uncertain time in the markets where the erraticism and volatility in public and economic policy, even if things calm down, as I theorized above, play out in unpredictable and volatile moves in individual stocks and the overall market. So let me stop here, catch my breath as always, and open the floor for really any reactions, thoughts, questions, things that are on anyone's mind. Plays out. All right, well, it sounds like everyone is very enthusiastic about stability, and it's hard not to. Well, what we'll end up doing is, Steve will send out an email to everyone, letting them know, but we'll end up putting a recording of the call up on the website, and we'll send the link around so that anyone interested in my case for stability will be intrigued by that. And in the meantime, we'll continue to put ongoing thoughts up on the website or on my own social media or the Family Firm social media pages. just as things continue to unfold. And of course, anytime anybody has any concerns with their own situations, please reach out, and we will be happy to, discuss how what's going on over the past few months has impacted your own personal finances. And we're very confident that the portfolios are built to withstand turbulence and the instability should that evolve or continue, I guess I should say. All right. Well, with that, again, just thanks to everyone so much for calling and for sending in the questions, and we will be talking with you all soon, I'm sure. Thank you.
Thank you, Nate. Great presentation.
Thank you.
Good night.